This content is for educational and informational purposes only and does not constitute legal, financial, or professional advice, as every policy and local jurisdiction varies. It is always recommended to consult with a certified professional before making decisions regarding your contracts. Imagine you've paid your insurance premiums on time for years, trusting that the company will be there for you when life throws a curveball, but suddenly an accident, a theft, or a health crisis occurs. You file your claim hoping for a lifeline, and the response you get is a cold document that says denied. In that split second, you feel like you've been robbed twice. First by the event itself, and then by the company you trusted with your money. But the reality is that the insurance system is not a charity. It is an industry designed to evaluate risk with surgical precision, where a single mistake in a word or a date can be the difference between receiving a $50,000 check or being left with a debt that ruins your financial future. Today we are going to crack open that black box so you can understand exactly what happens behind the office doors and how you can shield your assets so you never become a victim of the fine print. Because knowledge is the only real armor in a market where the rules seem to be written in a language no one ever taught us to speak. And in today's world, being insured is not the same as being protected, as real protection comes from understanding the internal mechanics companies use to manage their capital during catastrophic events. The pre-existing condition, labyrinth, and the digital paper trail. Did you know that an insurance company might analyze health details that you've long forgotten? And that a trivial doctor's visit from years ago is often the technical basis for denying $1 million policy. Many believe that when applying for health or life insurance, the most important thing is the speed of the process. But the risk analysis begins long before a claim is filed, right at the moment the application is filled out. Insurance companies in the U.S., Europe, and Latin America operate under the principle of utmost good faith, meaning they initially accept the user's statement, but the process shifts when a major claim occurs, as the company will then audit your medical history from several years back. If there was an omission regarding a physical ailment or a doctor-recommended study that wasn't declared, the insurer can technically argue that there was a misrepresentation of facts, which in many contracts allows for the cancellation of coverage. This phenomenon occurs primarily because people underestimate details they consider irrelevant. But to a risk analyst, any undeclared symptom is a fundamental data point. In these types of contracts, precision in information is the central axis, which is why total clarity from the start is the factor that determines the validity of your protection when you need it most. The reality of preventative maintenance and natural wear and tear. A property might be insured against fire, but if an old pipe fails and causes a flood, the cost of reconstruction could fall entirely on the owner if it is determined that the root cause was a lack of maintenance. In managing assets like homes or vehicles, there is a technical distinction between a sudden accident and what the industry considers a lack of preventative care. If a pipe bursts and damages $10, worth of furniture, but a prior leak was identified and not addressed, the loss is often categorized as a maintenance issue, which is excluded from almost all global policies. Insurers cover unpredictable events, not situations resulting from the passage of time or neglect. Therefore, if a roof suffers damage during a storm but it is proven that the structures were weakened by a lack of previous repairs, the claim is usually declined by arguing that the root cause was not the weather, but the state of the asset. This is a frequent cause of capital loss, primarily in regions with extreme weather where it is assumed that insurance covers home renovation, when its real function is to be a safety net for catastrophic events. The time factor and contractual notifications. A delay in communicating an incident can be the technical reason you lose the right to compensation for a car or a business. Regardless of the magnitude of the damage, time is a critical contractual element, as policies include specific deadlines for reporting claims that, if not met, can release the company from its obligation to pay. In the chaos of an accident, it is common to prioritize the immediate solution and postpone contacting the insurer, which represents a high financial risk. General conditions usually require that the report be immediate to allow the company to verify the facts in a timely manner. In markets like the U.S. and Europe, these deadlines are applied with technical rigor, while in Latin America they function as an indispensable administrative requirement. Early notice is a necessary formality, as a notification outside the agreed terms is usually the primary reason a case is closed without a deep evaluation of the actual damages. The gig economy and personal asset usage. Using a private vehicle for delivery activities or renting out a room through digital platforms can invalidate your insurance protection if that activity was not previously declared. Today it is common to use personal assets to generate income, but this often conflicts with the clauses of standard policies. If a vehicle insured for personal use is involved in an incident during a commercial activity, the policy might not respond because the risk level of a business is different from that of private use and the premium was not calculated for that activity. The same occurs in residential properties rented out on a short-term basis, where the insurer may state that an undeclared activity was being performed and decline payment for major losses. This type of situation occurs primarily when someone seeks to optimize income without adjusting the terms of the insurance contract. So, consistency between the actual use of the asset and what the contract states is the only way to keep coverage in force. Documentation and the burden of proof in the insurance world. Events that cannot be proven through physical or documentary evidence are usually dismissed, leaving the user with a total loss of their capital. In any claim process, the responsibility to prove the magnitude of the loss falls on the insured, which means that without proof that an object existed and what its value was, the insurer has no technical basis to issue a payment. After a loss adjustment, processes require invoices, photographs, and records of pre-existence. If a $2,000 piece of equipment is claimed, but no receipt exists, the valuation is usually minimal or the claim may be rejected for lack of technical support. This happens primarily in home and business incidents, where managing digital records becomes the only way to guarantee that your declared assets are recognized by the company at the time of a settlement. To close this lesson on financial education under the banner of Total Shield, it is valuable to remember a thought by Warren Buffett, who has built his success by understanding the nature of risk. He mentions that risk comes from not knowing what you're doing, and in this sector that means the real danger is not just the accident, but facing it without understanding the technical rules that govern the contract you've signed, which is why the strongest protection is not just the policy, but the knowledge to understand how the system works. Remember that insurance is not an expense, but a tool for stability. However, its effectiveness depends entirely on your ability to manage information and be proactive. The best strategy is to build a solid file of your assets today, so that tomorrow, if the unexpected happens, you have the peace of mind that your wealth is truly shielded. Thank you for joining us in this deep dive. Keep educating yourself so that your money always works for you and never against you. We'll see you in the next Total Shield video as we continue to build your financial freedom through knowledge. Building true financial resilience means becoming an active participant in your own protection strategy, far beyond just signing a document and paying a monthly bill. The complexity of modern insurance contracts reflects a global industry that operates on highly specific mathematical models, where every word and comma has a calculated financial impact. When you take the time to organize your records, photograph your belongings annually, and maintain a dialogue with professionals about your specific risks, you are effectively reducing the gray areas where denials often occur, primarily in an era of rapid economic change. Having a clear understanding of your coverage limits and your responsibilities as a policyholder is what separates those who recover from a crisis from those who are set back by decades. Your proactive stance today is the most valuable premium you can pay, because while money can buy a policy, only preparation can ensure it delivers when the pressure is on. This commitment to detail is not about paranoia. It is about respecting the effort it took to build what you have and ensuring that no technicality can take it away from you or your loved ones. As we navigate a world of evolving risks, let your knowledge be the shield that stands firm, turning potential financial disasters into manageable life events. Stay focused, stay documented, and never stop questioning the fine print that guards your future stability.